Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Tuesday. These are the stories that set your agenda. Metal momentum. Gold gains again with silver surging to an all-time high. But the risk rebound runs out of steam. Shares trade lower in Asia on fresh trade uncertainty. China heading back on shipping as it responds to US measures on the sector, slapping curbs on American units of a Korean shipbuilder. Plus, the US president calls it the dawn of a new Middle East as world leaders join him for the signing of a peace deal between Israel and Hamas. So trade volatility is back, and a reminder that China appears to be in no mood to reverse course at this point. We're hearing comments from the Trade Secretary, Scott Bessent, being reported by the Financial Times, attacking the Chinese economy, and additional measures now being put in place by Chinese officials in the maritime space. All of this leading to a risk-off mood across these markets after a very strong session on Wall Street and in Europe on Monday. Today, European futures pointing lower by 0.2%. Here in the UK, FTSE 100 futures pointing lower by 19 points. S&P E-minis, after gains of around 2% by the close yesterday, looking lower, pointing lower by 0.4%. Nasdaq 100 futures, again, a very strong session powered by the AI trade yesterday, now pointing lower by 0.5%. Let's flip the board and have a look cross-asset then, with a focus, as we've been discussing, on the metals space as well, given the eye-watering run-up that continues for both gold and silver. But we'll start with the 10-year, currently at 4.03, so close to 4% right now in the benchmark US 10-year, largely unmoved in the session today. Euro-dollar at 1.15, a little stronger, up 0.2% for the single currency in the session today. Gold at fresh record highs, closing in now on 4,200. SocGen saying their new target for the yellow metal is $5,000 per troy ounce, up 1.4% in the session today. And spot silver, for the first time, above 52.50. That was the mark in 1980, 52.50, crossing above that, 53.25 right now. A record. We have never seen this before in silver, up 1.7%, and that is partly down to a short squeeze here in London. Let's cross over to Asia right now, though, because Winnie Su is standing by in Hong Kong with a check on the markets there amidst this fresh trade uncertainty and the tit-for-tat, China versus the US. Winnie.
Yeah, there's a lot going on in Asia today, Tom. We are seeing that the gauge is extending losses to about 1% right now, and that's really on that new headline saying that China is now imposing curbs on the U.S. units of the Korean shipmaker Hanwha Ocean. And here we're seeing that is dragging Korea stocks from the green to the red here, with also Hanwha Ocean now down some 7%. And yes, earlier we did have positive earnings from Samsung saying that they were posting the best quality earnings in 3 years. And we are seeing a bit of a profit take there after the stocks having surged for some 70% so far this year. Now we take a look at what's going on in Japan, because that's also dragging down the overall region a lot today. So we are seeing that the Topix down some 2% and the Nikkei also at 1 point down 3% or so. And Japanese markets are reopening after a holiday. So quite a bit of a catch down that really is still driven by the political uncertainty and instability there after the collapse of the ruling coalition. So investors right now unwinding that Takaichi trade and rethinking who might be the next prime minister for Japan. And also take a look at what's going on in Chinese stocks, because we are seeing still a bit of a weakness there extending for another day because of that ongoing trade tensions between U.S. and China. So pairing some earlier gains, and we are seeing that onshores down flat-ish, and also the offshores actually leading a bit more losses. Overall, we are seeing a bit of a resilience when it comes to the Chinese stocks, when we saw how stocks actually rebounded yesterday afternoon and this morning, gaining a bit. So we are hearing that some investors are positioning into buying some dip, but overall, many are still cautious as we see how this U.S.-China trade tensions continue to develop.
Winnie Sue, thank you very much indeed with a check on the Asian markets, with the implications, of course, of the latest on the trade front and the unwind of the Takeichi trade in Japan as well. So as Winnie mentioned, shares in Korea's Hanwha Ocean are dropping after China slapped curbs on 5 of the company's US units. Hanwha is one of South Korea's biggest shipbuilders. It comes as Beijing says it is looking into the impact of the US investigation into its maritime sector. Bloomberg editor Jill Desis has more then. Jill, what do we know at this point?
Well, at this point, Tom, I think the really critical part of this is really just that these are the U.S. units of the South Korean company, and that I think when you're bringing into totality all of these little trade tit-for-tats that have happened between the U.S. and China over the past several days kind of calls into question whether we're actually seeing an increase in U.S.-China trade tensions ahead of what we're still expecting to be a meeting between Donald Trump and Xi Jinping, likely at the end of the month or early next. So this is really, I think, some of the critical things that we're looking out for. When it relates to these latest curbs that Beijing has just announced, really just within the last hour, I think, remember that there were some U.S. port fees that the U.S. had announced many months ago, but that were set to go into effect today that could result in large Chinese ships being charged millions of dollars to dock at U.S. ports. I think that kind of enters into the equation as well. So really, again, Tom, I think what you're seeing is that escalation of tension between the two world's largest economies, and some real questions here about what this may ultimately say about this anticipated Trump-Xi meeting.
And Jill, you talk about that anticipated meeting, and we heard from US officials overnight suggesting that that meeting is likely still going to be on. Scott Bessent saying that he expects that meeting still to take place. So fold in, and you've touched on this, but just round out the picture for us in terms of where these tensions lie between the two sides, because there was some take at the early start of the session today that maybe both sides positioning for a reopening of communication or continued communication, and now you have these maritime measures. Is there a risk it derails the conversations between the two sides?
Yeah, I mean, I think, the maritime measures are one thing, Tom, but where a lot of the escalation to me really seems to have resulted from were some of those measures that China put in place last week, some export controls involving rare earths. That's really been at the heart of a lot of these U.S.-China trade negotiations and tensions. That was something that came up earlier this summer when these two sides met in Geneva to sort of work through talks. It seemed like they had maybe reached some agreement on the rare earths issue then, but then we saw a delegation of U.S. lawmakers go to China actually maybe a month or so ago, mentioned that rare earths are still a major issue there. I think that that's really where a lot of the tension here lies, at least in my view. And, that's something that they seem to be continued to open to negotiating. We did hear a bit from the China side that there's still some working level talks that are going on between U.S. and China. So it does seem like there is at least some desire to continue those negotiations before this Trump-Xi meeting. But again, I think when you've got this kind of tit for tat, you've got these latest measures announced from China, you do have that back and forth, that's still kind of, it symbolizes to you that even if these two sides are negotiating, there's still, a bit of daylight between them and potentially some work to go before they reach a negotiation on trade that they feel comfortable with.
OK, an important update from Bloomberg's Jill Desis. Jill, thank you. Let's stay on this story and the market reaction because, of course, as we've been discussing, the US Treasury Secretary Scott Bessent says he still expects President Trump to meet China's Xi Jinping, saying there had been substantial communication over the weekend. Donald Trump had, of course, threatened to cancel their meeting, as Jill was saying. He threatened that later this month, the meeting expected later this month after Beijing announced new limits on rare earth exports on Friday. Let's get more in terms of how all of this is tying in to the market moves. The volatility is back. Valerie Teitel, let's bring you in at this point. Val, what are we seeing across these markets, the adjustments around the trade story?
Well, look, risk is on a back foot this morning, tied to what you were mentioning, these export restrictions on rare earths from China, prompting Scott Bessent to write in the FT that China is tempting to bring down the world's global economy. His words, not mine. He's also said in that article, Tom, that in China's, guide to try to export their way out of this deflationary recession, that they could bring down the world's economy with them. Some strong words from Scott Bessent in the FT this morning, really tempting to market think who was the safe pair of hands to walk back these comments from Trump last Friday that did kick off that risk-off mood. The chart behind me is S&P futures over the last last 3 days, Tom, we still have a gap to make up. Even though yesterday's rally was a decent one, we're still down over 1.5% from Friday's session, and this overnight news not helping. It does feel like the market, Tom, needs an update every few days on whether this Trump-Xi meeting is still expected at the end of the month. But we should tie in the other global moves off the back of this. Gold is rallying no matter if equities are higher or lower, jumping another 1.3% today. Geez, 1.6% today. Mark my words. Gold nearly reaching 4,200. We heard from SocGen overnight. They are amping up their 2026 target for gold to 5,000. But Tom, at this pace, we're looking at 5,000 before Thanksgiving. This rally has been unstoppable since the middle of August. I also want to mention we did hear some interesting comments from a Federal Reserve, a new Federal Reserve president from the Philly Fed, Anna Paulson. She was speaking to the media for the first time yesterday, and she did comment, Tom, that the U.S. economy doesn't seem strong enough to really generate sustained inflation on the back of tariffs. She becomes a voter in 2026, so add another dovish member to the voting council for the FOMC. We did have treasuries reopen after their holiday yesterday. Note, Tom, they are holding on mainly to that massive rally from Friday.
Valerie Titel, thank you very much indeed. Yes, she was talking, wasn't she, confirming really market bets for another 2 cuts by the end of this year, almost 2 fully priced by these markets, and certainly fully priced for the next meeting at the end of this month by the Federal Reserve. Expectations that the Fed will cut again at the next meeting this month. Meanwhile, President Donald Trump has laid out his vision for broader Middle East peace following the success of the US-led mediation efforts, of course, to end the conflict in Gaza. Trump signed the Gaza agreement alongside world leaders, calling it the historic dawn of a new Middle East.
This is the day that people across the region and around the world have been working, striving, hoping, and praying for. They have done things over the last month that I think were really unthinkable. Nobody thought this could happen. With the historic agreement we've just signed, those prayers of millions have finally been answered.
Let's go to Bloomberg's Dan Williams, who's on the ground for us in Jerusalem. Dan, of course, an historic day, which you were present for. You covered it all for us yesterday. President Trump, of course, taking claim for the events, and even his critics suggest that he is right to take much of the credit for that. But 3,000 years, he says, it's taken to reach this. There was also a lot of hyperbole, as well as the reality that this was an historic moment.
Indeed, a rather epical speech there by Trump in Sharm. Perhaps his ebullience could be understood. He was blessed as a peacemaker in Israel's assembly, really a crowning speech for what was a very significant day, and not just for Israelis, for Palestinians in the Gaza Strip who suffered during this war, and for others in the region who feared the destabilizing effect of a war that lapped up and ignited several other fronts. That's part of the reason for the impressive turnout of foreign leaders at very short notice alongside the US president in Sharm in Egypt. What was the event itself out there? Well, I'd say it was somewhere on the spectrum between a photo op and a working meeting. Obviously, there's only so much that can get done in a couple hours of posing for photographs and signing documents, especially as Trump ran late. Such was the success of his visit in Israel, the duration of his speech in the Knesset in Jerusalem. What I think he was doing there was making sure he had the greatest possible number of stakeholders, people and countries and governments with a buy-in to his Gaza peace plan, a plan that will require long-term commitment, a lot of money, a good deal of risk-taking. He wanted them on record, on camera, committing to stay with him for the entire stretch of what will be a major strategic development for the entire region if it's successfully implemented.
And on that question of implementation, Dan, the 20-point plan, what are we watching for in terms of the sequencing? What comes next in terms of implementing that plan?
Well, the first stage of the plan, the first, so we say 2 or 3 points of the plan are out of the way. They were met yesterday with the return of the last living hostages held by Hamas in the Gaza Strip, though it's worth noting that a small number of hostage bodies were delivered, just 4 out of 28, and that could prove to be a hurdle. There's a good deal of rancor building in Israel, and indeed Trump did raise that in Sharm yesterday. But what does the future hold for the deal now? There's ensuing clauses require that Hamas disarm, that many of its men accept amnesty returned to the fold as regular Palestinian civilians who accept coexistence with Israel, who renounce terrorism effectively. It also requires an interim alternative Palestinian government that would be overseen by what's been called the Board of Peace, sort of a board of trustees chaired by Trump himself, by the former British Prime Minister Tony Blair, and an interim security force whose members are not yet clear. Apparently, there would be a U.S. military component outside the Gaza Strip, whose job would be everything from recovering the bodies of the war dead lost from the rubble, excavating for unspent munitions that could cause a danger, and indeed making sure that while a full-scale, full-term permanent government is set up, security can be established in the Gaza Strip to reassure all parties.
Dan Williams in Jerusalem, thank you very much indeed for that update. And of course, Dan will be continuing to cover this story for us as the story evolves, and we got more details, of course, out of the region. We're going to switch focus right now. It's earnings season, of course. We're looking ahead to US banks later today. But the earnings coming through from Ericsson a few minutes ago. The stock is down around 10% year to date, but the maker, of course, of telecoms equipment coming through with a beat in terms of the margin view. So Ericsson seeing fourth quarter networks adjusted gross margin of between 49 to 51%. The estimate had been for 49%. So at the high end of that range, 51%, that is a beat on the estimates. They have also signed a deal with Vodafone as well, agreeing a 5-year networks deal with Vodafone. For that is a stock to watch with the earnings coming through from Ericsson and slightly higher margin forecast than the estimates. Here's what else to think about today then. Before the market, bank earnings then, JPMorgan, Goldman Sachs, Citi, Wells Fargo, of course, before the open of the markets in the US, BlackRock as well. So a big day for the US earnings story. We're going to give you a preview in this show as well in terms of what to think about, what to focus in on with all those banks coming up. And at 5:20 p.m, Jay Powell of the Federal Reserve, of course, will give a keynote speech at the NABE annual meeting. So we will give a run up to that. And, of course, we'll bring that speech to you live as well with all the market reaction. And it's 6 p.m. Talking of central bankers, Andrew Bailey of the BOE, the governor, of course, will be speaking as well. Another one to keep an eye on for you. Andrew Bailey in focus at 6 p.m. UK time. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, Dayb Go, on the terminal. And, of course, there is a focus on the debasement trade and all the details around that, the implications for crypto, gold and US Treasuries. Coming up, high hopes for a banking bonanza then. We're going to look ahead, as I mentioned, to the big banks kicking off US earnings season. That is next. We'll set you up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, major US banks kick off earnings season today with JPMorgan, Goldman Sachs and Citigroup all expected to post strong results in investment banking and trading. Charlie Wells is here to give us a preview. Charlie, what is the overarching narrative then going into this earnings season with the lens on the banks?
Well, Tom, there are very high expectations going into this earnings season. I want to take a look at that KBW Bank Index, that index of major lenders across the United States. It has been outperforming the broader market over the past year. You can see a lot of optimism around that deregulatory environment. But there's also a number I want to bring up, and it is $1 trillion. That is the value in the third quarter of global deals. Now, this is adding to a lot of optimism for those investment banking businesses because these banks or investment banking sides can clip the fees from that. So a lot of optimism there, but we're in a moment of transition. And so a lot of the questions coming from analysts could have to do about rates. We've seen that rate cut in September. This changes the dynamic on lending. This changes the dynamic, making some of the fee sustainability all the more important for these banks.
Who then, Charlie, could be the winners and losers today?
Well, Tom, one of the major themes we've seen is volatility in the markets continuing despite some of the headlines. We can see numbers coming in for those trading desks. As we think about equities trading, Goldman Sachs is expected to come out on top on FICC trading. It's JPMorgan. Also, IPOs have had their best quarter since 2021. So some of that equities underwriting should be really positive. But I've got a cautionary tale here. We're taking a look at Jefferies. They report a few weeks before some of these major lenders. There's something of a canary in the coal mind, they had a really solid report, their best third quarter for revenue ever. But look at the red on that screen there. You can see this is related to that First Brands exposure, concerns about bankruptcies in the auto space. So just because these numbers come out solid does not mean that these banks are scot-free.
Yeah, certainly some tensions, particularly when it comes to leveraged debt and some of those companies exposed and the banks exposed. What is it likely to tell us about the health of the US economy? To what extent are they going to be a gauge on that story as well, Charlie?
Yeah, Tom, well, there are greater stakes here because, of course, the U.S. is in the middle of that government shutdown. That data is just not coming through. So a lot of analysts are seeing these bank numbers about the economy, about the consumer, as something of a proxy that could help with some of the analysis there. But again, that puts more focus on these bank earnings. It also puts more focus on the outlook. We've got this quote from Mike Mayo, veteran banking analyst at Wells Fargo, talking about how the market reaction could come down to the outlook. What a lot of these CEOs say on these earnings calls about earnings going forward, about the state of the economy, about tariffs, about trade.
Charlie Wells, fantastic setup for the bank earnings kicking off later today. Charlie, thank you. Still ahead, we're going to take a look as well at ASML, the only company in the world that makes the machines needed to produce the highest level chips. What to expect from their results? Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So ASML is going to be reporting tomorrow. It is the world's only maker of extreme ultraviolet lithography machines. That's the kit needed to make the most sophisticated chips. It's retaken the crown, as you can see behind me, as Europe's most valuable publicly listed company. The stock is up about 25% year to date with a market cap of around $325 billion US. So shares have rallied in recent weeks as well, following the deals between the likes of Nvidia, Intel, AMD and OpenAI, all signaling that increased demand for AI chips continues. Investors also betting that Intel, by the way, boosted by those investments from the Trump administration and Nvidia, could ramp up their own spending on ASML's chip-making tools. And you can see, of course, it's taken the crown, as I mentioned, versus SAP and LVMH. Now, ASML's market cap is still only a fraction of Nvidia's more than $4.5 trillion market cap. So 375 versus 4.5 trillion. That's a comparison. The company's stock performance is also topped by key customer TSMC, which you can see here, which uses ASML's bust-sized lithography machines to actually churn out the AI chips for Nvidia and Microsoft. The focus now switching to tomorrow's third quarter earnings then and the outlook. ASML's orders, they can swing pretty wildly between the quarters as foundries like TSMC and Samsung adjust how much they invest in chip-making tools. Most analysts expect ASML's extreme ultraviolet lithography machines to contribute more than 2 billion euros in orders. Citi analysts forecast total orders of about 6 billion euros. ASML's CEO, by the way, Christophe Fouquet, has already warned about the tariff impact on the outlook. So investors will be listening out, of course, for any updates from Fouquet, the CEO, and his team on trade and on US-China tensions. So that's a setup for ASML with earnings zone from that company tomorrow. Now, some other stories making the news this Tuesday. SpaceX's Starship lifting off for space on Monday and returning to Earth largely intact in a closely watched test of the mega rocket's ability. The launch system matched several of the successes seen in an August flight. These are critical milestones, of course, for Chief Executive Officer Elon Musk's ambitions to carry astronauts to the moon for NASA in as little as 2 years. And Bloomberg has learned that the German AI image startup Black Forest Labs is in talks to raise up to $300 million, giving it a valuation of almost $3.3 billion. Sources say the fundraiser is being co-led by Salesforce Ventures. Black Forest Labs is one of the few European startups developing its own AI models alongside Mistral AI in France. Coming up, staying on tech, chip giant Nvidia announcing a raft of new collaborations, pushing shares higher. We're going to have the details on those deals next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Metal momentum, gold gains again, with silver surging to an all-time high. But the risk rebound runs out of steam. Shares trading lower in Asia on fresh trade uncertainty. China heading back on shipping as it responds to US measures on the sector, slapping curbs on American units of a Korean shipbuilder. Plus, the US president calls it the dawn of a new Middle East as world leaders join him for the signing of a peace deal between Israel and Hamas. So, to the markets, and you're on the back foot. The volatility around the trade story continues. We're having mixed messages out of the US and China. Additional action from China suggesting that Beijing is far from being ready to back down. But we're also hearing that the US side is prepared to keep communications open between the two sides. So the volatility around the trade story is there. You're seeing European stocks pointing lower by 0.2% today after modest gains of around 0.4 on the European benchmark yesterday. The FTSE 100 futures picture is also a little bleak, pointing low by 0.2%. Commodities worth noting as well for the FTSE 100, with softness coming through from iron ore and copper. S&P E-minis pointing to losses of 0.4% after gaining around 1.5% on the S&P 500 yesterday. Nasdaq 100 futures, after a very strong session on Monday, now pointing low by 0.6%. It was the AI trade, the momentum, the Broadcom OpenAI story that propelled the gains yesterday. Today, it seems, looking for catalysts, uncertainty, trade angst feeding through into the futures picture. Let's flip the board and have a look cross-asset. Treasuries largely stable, trading resuming today, 4.03, so close to that 4% mark for the benchmark US 10-year. Euro is currently at 1.15, so a little bit of strength for the single currency, up 0.1% versus its US counterpart, and gold at fresh record highs. Look at that, closing in on 4,200. It's even a mark we could get today, you would expect, on current trajectories. Currently up 1.6% on the yellow metal, and gold above 52.50 for the first time on record, comfortably above 53 right now on silver, spot silver, I should say, up 2% so far in the session. The London squeeze on shorts certainly playing a factor. Money pouring in to precious metals still. That's a check on your markets then. Let's get back to the Middle East and the geopolitics. President Donald Trump, of course, laying out his vision for broader peace following the success of US-led mediation efforts to end the conflict in Gaza. Niamh McBurney, Associate Director at Control Risks, joins me now. Niamh, thank you for your time. What are you watching for in terms of the steps ahead? Phase 1 is being implemented. What happens in the days ahead? They're going to be consequential as to whether or not this is a lasting peace in the region.
So over the next 2 to 4 weeks, we're going to be watching for a much more concerted diplomatic effort, continued concerted diplomatic effort by Qatar, by Egypt, to make sure that there is momentum behind this. Israel and Hamas, neither of those two parties were present at the signing of the deal in Egypt yesterday, which shows you how much further there is to go on the two of those coming to an actual agreement. I think we could argue that this was a mediator agreement rather than an agreement by the two sides. So we're going to need to see movement on the positions, both of Israel and Hamas. We're going to need to see Hamas agree to disarm. It has not agreed to disarm yet. And also the Israeli government ultimately commit to a timetable of withdrawal, which has been laid out partially in Trump's 20-point plan.
What is the likely governing of Gaza at this point? Who is best placed to take that role that could possibly assuage concerns on both sides? In terms of governing Gaza, what are we watching for?
There's a couple of different potential outcomes from here. Although the 20-point plan itself lays out what the president, US President Trump has called a board of peace. There is some reticence in the region and within the Palestinian political community for this to be overseen by foreigners, because Palestinians believe that they should govern themselves, and particularly at such a fragile moment when political cohesion is absolutely fundamental, within the Palestinian political elite to draw this forward. We're going to see a reconstruction of the Palestinian Authority, but there is some reluctance within certain aspects of the Palestinian Authority to really follow through on that. We could see pressure from the Gulf states to see a much more local, regionally generated kind of governance proposal, something bounded in maybe shared Palestinian and Arab governance that takes us away from the more internationally and Western-led idea that President Trump has laid out, because ultimately the individual that's been suggested as a potential leader of this below President Trump himself, former UK Prime Minister Tony Blair, isn't necessarily amenable to all parties in the region, and Trump himself alluded to that yesterday in comments on Air Force One. So there is a soft plan laid out in the 20-point plan, but it's fair to say that that's pretty fragile. That won't be agreeable to all parties, and so we could see an alternative governing vision arise. Ultimately, if something that helps progress this forward, I think it's fair to say that the Americans may agree to a more regionally generated suggestion, in order to make sure that we see progress in a second phase.
Niamh, on the humanitarian crisis in Gaza, how far are we in terms of getting aid into that territory? President Trump said aid is now flowing in. Are they matching? Is the United Nations able to match the needs of the people right now? Where are we in that part of the story?
There is enormous need in Gaza, both from a basic humanitarian standpoint and then also a kind of, basic early stages reconstruction. The last estimates that were put out was the UN was able to provide 400 trucks a day. That estimate was from that on Sunday. There were probably the same or maybe even slightly more yesterday. The plan that's been laid out is to match the agreement of the 19th of January, which is to have 600 trucks every day. But this also lays aside the point that before the war, the overwhelming majority of goods coming into Gaza actually came in through the tunnels that Hamas had been using, smuggled illegally. So presuming that the tunnels are now out of operation, which is one of the conditions of the Israeli government, we're going to need to see even greater volumes than the 600 trucks a day, in the next few months to be able to meet the sheer demand.
And they've given your regional expertise on the Saudi-Israeli relationship. Is there an opportunity now for greater proximity and for work to be done there, given the foundations of the Abraham's Accord? Where does Israel and Saudi Arabia stand at this point?
There is now more distance between Saudi Arabia and Israel than there has been for some time. And a great part of this is because Israel has been so slow to move forward on the two-state solution. And ultimately, there's reluctance within Israel politically to manifest a two-state solution and allow a Palestinian state. Saudi Arabia has decided it is core to its regional policy and its policy with Israel that it must see material progress towards a two-state solution, and it hasn't seen that yet. What has been interesting is taking a wider view is that we're seeing a movement from other countries, particularly Indonesia, other really important Muslim majority countries, who would be looking to capitalize on potential economic benefits coming out of the US and Israel if they were to recognize the state of Israel. But for Saudi Arabia now, really, the kingdom joining the Abraham Accords is really on the back burner, and we can expect that to stay the case until there is material movement on Israel's policy position when it comes to manifesting a two-state solution.
OK, excellent analysis. Niamh McBurney, thank you very much indeed. Associate Director at Control Risks. Now some other stories making the news. This Tuesday, Ukraine's president says he plans to meet the US president in Washington this week to discuss energy, air defences and long-range missiles. The meeting on Friday follows two phone calls between Donald Trump and Volodymyr Zelensky over the past week. And in France, Sébastien Lecornu will address the French Parliament for the first time since being reappointed Prime Minister. That address happening today as his fledgling government tries to pass a budget. President Macron has called on the fractured Parliament to deliver stability for the country rather than precipitate another government collapse. And JPMorgan plans to funnel $1.5 trillion over the next decade into industries that strengthen US economic security, ranging defense and energy tech to rare earth minerals. CEO Jamie Dimon says the move is 100% commercial and not philanthropic. The initiative will involve JPMorgan's asset and wealth management arm, which oversees client investments. Back to the chip AI and tech story right now because chip giant Nvidia has announced a raft of new collaborations that pushed markets higher, including data center packs, power infrastructure and AI factories. Joining me now is Bloomberg Markets correspondent Nora Melinda. Nora, talk us through the deals and the market impact.
Well, we certainly did see a push here, a lot of money being poured into a lot of those companies that are surrounded by AI. And of course, as you mentioned, we did see a swath of deals and collaborations coming out, and particularly with Nvidia. They're pairing up with a lot of companies from Vertiv, Navitas, a few other names out there, Power Integrations. And you're seeing a lot of these companies really rallying, some of them for double-digit gains at yesterday's close in New York City. And we're really just seeing information technology, of course, the best performing sector in the S&P 500, coming off of this. It really is a different story that's being told right now, apart from what we saw on Friday, where there was a massive sell-off. You really are seeing a lot of AI optimism. It really has been insatiable. This has really been the year of the bet on artificial intelligence here.
Yeah, truly. And we just get reminded about that almost every 24 hours. Another day, another flurry of deals, because there's Broadcom and OpenAI. Absolutely. As well. We're seeing the read across to the Asian session. And yes, dampened by the trade anxiety. But it seems like if there's ever a sell-off in these chip names and these tech names, then dip buyers go in and buy the dip. What are you watching for next in terms of the momentum, expectations that this can carry on going forward?
I mean, certainly earnings. Of course, we're going to have bank earnings kicking off today. So we're going to see what happens in terms of the tech space more broadly and see what deals continue to come through. But if you think about the fact that a lot of these major indexes in the U.S. were hitting double digits, up more than 20% the past 2 years. If you look at the Nasdaq 100, up double digits this year as well. So, I mean, you really are seeing a lot of optimism amid all the uncertainty here.
Nora, thank you very much indeed on some of the chip stories, the tech stories, and the impacts across the markets. Of course, Bloomberg Markets correspondent Nora Melinda. Coming up, 10 years after the Paris Agreement and with green policies faltering around the world, how has Europe's role in the energy transition changed? We're going to be speaking with JPMorgan's Chuka Umunna. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe now. European Union lawmakers have agreed significant cuts to a set of sustainability directives after intense pressure from the bloc's biggest member states. A decade after the Paris Agreement was reached, Europe faces pressure to balance climate ambitions with costs, security and competitiveness. Chuka Umunna, Global Head of Sustainable Solutions and EMEA Head of Green Economy Investment Banking at JPMorgan, will be discussing some of these topics at Bloomberg NEF Summit. The London Summit, of course, starts in the capital later today. Joining me now, Chuka, thank you very much indeed for joining me on
Thanks
set.
for having me back on, Tom. Good to be here.
You're going to be part of a panel. Part of this will be, no doubt, discussed as well. The regulatory regimes are adjusting, both on this side of the Atlantic, of course, in the US, at a time when, in fact, tech stocks, green stocks, I should say, tech stocks have done very well. Green stocks have done even better year to date. What are you going to be focused on? What's top of mind for you at this point?
Well, I think, first of all, you're right to say when you look at the sustainable finance landscape, it's in rude health. Public sustainable AUM is at $3.5 trillion, record highs. Now, it's true that fund launches have slowed down a bit, but even over the summer months, we saw 14 new funds launch, raising around $27 billion to invest into this space. And as you said, I mean, if you look at the performance of the Eco Index of green economy stocks, it's up 61% over the last 12 months compared to the S&P 500 up 18% and the Nasdaq up 26, 27%. So, and what's driving that? I think it's partly a reduction in interest rates. Of course, higher interest rates disproportionately adversely affected green economy stocks, but also the perceived future energy demand coming from AI, of which renewables are an essential part of the answer, because, gas turbine capacity is not what you would need it to be, and nuclear, of course, takes years to come on stream. And so investor sentiment has turned positive around green economy stocks. And if you look at the private markets, more broadly in the private markets, deal activity is up now relative to 2024. But we've had a number of big fund launches. Just last week, Brookfield announced their new energy transition fund, $23.5 billion. That's coming off the back of EQT's fund, similar fund launched earlier this year. And of course, Blackstone's $5 billion energy transition fund too. So, both in the public and the private markets, there's actually quite a good story to tell here. And who would have thought, given the perceived change in sentiment at the beginning of the year with the different stance of the US administration?
Well, we've gone from the Inflation Reduction Act, which was essentially a Green New Deal to some extent, and what that meant for spending and support, fiscal support for that space, to an administration that is really taking aim at solar and wind in particular. So what is that doing to fund flows when it comes to the US versus Europe?
Well, actually, if you look at the BNEF renewable energy investment figures for 2025, we haven't got the whole year, of course, are looking like they're going to come in higher than 2024. I think in many respects, though, Tom, people view this debate in terms of, are you for energy action, energy transition investment, or are you denying the need for it? And the nature of the debate has really changed because sustainability energy transition is no longer viewed in isolation. It is interwoven with these issues of economic competitiveness and geopolitics. And certainly here in Europe, if you look at the change, what was the economy across all of Europe based on? It was, cheap Russian energy, the Chinese export market, Chinese imports coming into Europe, and US security guarantees. That has, of course, been completely upended, and it's led to governments, not just here in the UK, but across Europe, rethinking their approach, being more interventionist, adopting industrial strategies with a view to becoming more self-sufficient and achieving this strategic autonomy. And in many respects, that is the other side of the sustainability coin, because it's not just a question of climate and the environment, it's how do you become more self-sufficient. And as a result of that, we are going to see a lot of fiscal spend, and that is also inviting investors to look differently at green economy stocks, because what they are looking at is there an advantage to be taken not only from being aligned with the sustainability thematic, but also sovereignty, the strategic autonomy thematic. And our sustainable investing analysts in our equity research department have identified 150 stocks that benefit from both these thematics.
OK, where are the key opportunities then? Let me push you on that in terms of where JPMorgan sees the key opportunities right now.
Well, I mean, clearly, if you're looking at resilience and national security, energy security is the other side of the coin to sustainability. So across the spectrum, both renewable, low-carbon energy, but the associated adjacencies that enable a green economy to come into action. And that also means looking at critical minerals, which is a big focus for the European Union and the US as well. And we're doing our bit at JPMorgan too. We had a goal that we set, or an aspiration in 2021 to finance and facilitate $1 trillion to help with the transition. We've done over $310 billion worth of financing against that $1 trillion target. And just yesterday, Jamie Dimon, our CEO, announced our new resilience and security initiative, looking to finance and facilitate $1.5 trillion to help with the security and resilience of the United States over the next 10 years. So you see these two thematics, security and resilience and sustainability, coming together.
You talked about AI. If the US continues to fade out, the US administration continues to walk back and unpick and take aim at solar and wind, can they still succeed on AI without those two energy components?
Well, they have not ruled out renewables being part of the energy mix. And of course, with the need for electrification, AI demand, and that's before you look at the global south energy needs, we need more energy from all sources. And interestingly, in the US, they do see renewables as being part of the overall energy mix. Of course, there's a big focus on geothermal and nuclear.
Is that enough? Is that enough, geothermal and nuclear?
No, you need all of the above.
So they will need wind and solar in the US?
And I think it's difficult to conceive of a situation where they won't need to tap into those sources of energy. So I think this debate is changing. And it's no longer a binary debate. It's one that involves complex issues of geopolitics and competitiveness as well. And that was, of course, thrown into sharp relief for us in Europe in the report that Mario Draghi produced And, you know, I suppose the big complaint that we have from so many of our clients is move forward faster on the Draghi reforms.
OK, Chuka, thank you very much indeed. Chuka Umunna, of course, who is Global Head of Sustainable Solutions. Really smart take in terms of the fund flows, what's happening on the investment landscape when it comes to renewables and what to think about in the months and years ahead. EMEA, of course, and Economy Investment Banking at JPMorgan. Global Head of Sustainable Solutions and EMEA Head of Green Investment, Economy Investment Banking at JPMorgan. And the BNEF Summit, of course, which Chuka will be a part of, takes place over the next 2 days with the whole event being streamed live. Among the conversations, Anna Edwards is going to be speaking to the European Commission Executive Vice President Teresa Ribera. Scan the QR code to watch or head to Live Go on the terminal, giving you a check on the futures picture as well right now with that change in sentiment on the trade uncertainty that's come through. Additional measures coming through from China, focused on the maritime trade with a particular lens on US units of a major Korean shipbuilder. And currently, European futures are down 0.5% after a pretty decent session yesterday, up 0.4 for European stocks. Today, pairing those gains, FTSE 100 futures pointing lower by 40 points, S&P EMEA is lower by 0.7%, and the Nasdaq 100 down by 0.9%. There's a lot more coming up. Stay with us. This is Bloomberg.
Labor market risks do appear to be increasing. Not outrageously, but noticeably. And momentum seems to be going in the wrong direction. Against this backdrop, the FOMC's decision to cut rates by 25 basis points in September made sense. Over the rest of the year, I view easing along the lines of the median SEP policy path as appropriate.
The Fed's Anna Paulson speaking at the National Association for Business Economics annual meeting. Expectations of further rate cuts, of course, fully priced in for this month. 2 cuts priced in by the end of this year. And you have to think about the rate cuts scenario when you think about the run-up for precious metals. And this year-to-date chart shows what's happening between gold and silver. Silver is the white line, outperforming the yellow metal. And you've seen that squeeze in terms of the short squeeze, particularly here in London, just in the last few days, breaking to record highs, 53 right now, above 52.50, which was the record set in the 1980s. The London short squeeze to the point where even transatlantic flights are being booked in terms of the cargo to ship some of those silver bars over to London. Let's flip the board and check in on the debasement trade as well, because gold is part of that story. The concerns, of course, about the debt run-ups in a number of nations. Gold significantly outperforming then your average exchange rate in terms of the nominal effective exchange rate for most nations within the G10. So think about that as well when we think about the debasement trade. There's some great reporting on the Bloomberg today on that. Briefly checking in on the altcoin trade as well. That has crashed in the last week. Thin liquidity, question marks about where the smaller cryptocurrencies are going to find any support at this point, and that is causing some anxiety in that ecosystem. The opening trade is up next. This is Bloomberg.